Hi, my name is Lisa Ritter, broker owner of RE/MAX Results. And today I am here with Mike Mancuso, president of First State Bank. And I've been trusting Mike for about a decade now. Would you say that's about right?
Close, yeah.
Yeah, yep. My husband used to work for him. Incredible man, great bank. Thrilled to be partnering with them and sending them business. Today, Mike's going to tell us a little bit about what's going on in his loan world. First of all, we'll start out with what are rates at?
Interest rates are pretty favorable, believe it or not. There's been a little bit of a Trump bump that maybe a lot of people have heard about since he was elected. Regardless of what you think about him politically, the business community thinks it's going to be favorable to have him as president. Well, what's good for the economy is necessarily bad for interest rates. Not terribly bad. However, the jury's out. He's got a lot of plans, but he's having a lot of resistance to getting this put together. So the Trump bubble is running out of a little bit of a steam. And so interest rates are still pretty favorable. They're around the 4% on a 30-year fixed on a conventional loan, and around 3 5/8 on an FHA VA type loan. So they're still really favorable. They're up from their all-time lows, but those were all-time lows. In our lifetimes, a year ago, almost a year ago today, we'd never seen rates that low before. So all in all, they're still pretty good.
Good, good. And something that not everybody knows about loan rates, because admittedly, we're not doing live work right now, is loan rates can change from hour to hour, not even just day to day.
Yes, they can. If there's something going on, there's been times, not recently, but there's been times where we'll get 3 or 4 increases or decreases or some kind of changes in a day if the market's really swinging wildly. If you're going to shop lenders, you should shop your lenders within a couple of hour window, because beyond that, things can change enough that you're not getting a fair comparison. And one of the best ways to do that is ask them to send you an estimate with an APR on. APR stands for annual percentage rate, and that takes into consideration not only the rate, but any prepaid financing charge the lender is charging along with that rate. And that's going to give you the fair comparison from lender A, B, C, and whatever.
Okay, good. That's good to know. So tell me about what you're hearing from home buyers.
Yeah, depends on the type of home buyer, but the biggest challenge for let's say the first-time home buyer, or maybe the first-time step-up buyer, is still cash to close, believe it or not. Now, there's lots of ways to get around that. If you're a veteran, of course, you can get a loan with no down payment, but you have to be a veteran in order to have done that. That excludes most people, not everybody, but most people. FHA has a 3.5% down program. Most people can swing that. And then with a conventional loan, you get in with as little as 3% down payment. In Omaha, between down payment and closing costs, normally, this isn't exact, but it's normally around 7%. So, for example, on an FHA at $100,000, it's a 3.5% down payment, which is $3,500, about another $3,500 in closing costs and prepaid, so you need $7,000 somewhere. So if you've only got $3,000, where does that money come from? Okay, there are other programs available where maybe you can augment that. So for example, if you're a first-time home buyer, there's a NIFA program. NIFA stands for Nebraska Investment Financing Authority. It's for first-time home buyers who make under a certain income limit, and they have a home buyer assistance program where you can borrow the down payment. You still got to come up with at least $1,000, but most people, even first-time home buyers, can scratch $1,000 together to buy a home. Now, if you're dealing with maybe the second or third time step-up buyer, those people typically have built up some pretty good equity in a house that they're selling. It becomes a conventional loan. Although you can get in with a conventional loan with as little as 3% down, but a lot of those folks are getting 20% down. They're borrowing less, they don't have mortgage insurance and those types of things. So all in all, the economic picture is a little bit better for those folks.
Definitely. We're seeing sellers come to the table with a lot more equity than in years past. So that's a healthy thing for sure.
This market is certainly producing that.
That's right. That's right. What do you see in the upcoming months or this year in general happening with mortgage rates?
Yeah, I think if you'd have asked me that question in January, I'd say I think we're headed towards 4.5 or above, maybe even close to 5%, but I don't see that anymore. And I get 4 or 5 blogs from industry forecasters, and we have a forecasting service ourselves at the bank. And I think the jury's really out right now. There's a pretty good chance that the Fed will increase again in May, but that's already baked into the cake. So our interest rates aren't predicated on what's happening today in the market. It's predicated on what we think is going to happen 60 to 90 days from now. So that's within a 30 or 40-day window. It's already really baked in. We don't think it'll do anything to rates.
Gotcha.
Now it's really going to be on what the economics numbers say post-May, if the Fed increases in May, on whether or not rates continue to go up. And that's going to be based on whether or not Trump can get his health care plan, which didn't get passed, obviously, if he can reconfigure that and get it passed, and then if they can build on that with a new budget, there's some tax cuts that are in the plan. So it really kind of depends on how that materializes, what we see. But if you ask me in January, I'd say, hey, it might be 4.5% to 5%. If you ask me today, I'd say I don't think they're going to be a heck of a lot different than they are today.
Okay, all right, good.
Good news for all of us, yeah.
I'll totally take it.
Yeah, absolutely.
Well, and before we started filming this, I asked Mike, hey, what's your favorite quote? I love knowing people's favorite quote. I think often it's a reflection of who they are, and I know this certainly holds true for Mike. The quote to commit to for today is, do unto others as you would have done unto you. So thank you so much for being here, Mike. Really appreciate all that you do.
Welcome. Thanks for having me.
Yeah, absolutely. And as always, my prayer for you is that you not just dream about the life you've always wanted, but you take the first step and then the next towards making it happen. Thanks for watching.